That gap in between, from when you stop working to roughly age 72, is the lowest your tax rate will ever be for the rest of your life. And that gap is incredibly powerful. So during that window, you can pull money out of your RSP at 15% or 20% tax instead of the 35 or 40% that you're going to pay later when everything else is completely stacking on top of it. You can delay your CPP and OAS so they're permanently 36 to 42% higher when they do start. That window I was talking about has a fixed date. So that window is roughly when you retire to age 72. If you retire at age 58, you get 14 years of low tax withdrawals. If you retire at 62, well, you get 10 years of withdrawals. If you retire at 67, you only get 5 years. Every single year you work past the point where you're financially ready, well, it's a year of that window that you actually lose. And that year has a really big dollar value to it. Somebody who retires at age 60 and uses that full 12-year window to strategically melt down that RSP might save $80,000 to $120,000 in lifetime tax, compared to someone who retires at 67 and only has that 5-year window. So that's the same portfolio, the same spending, and the same investments, but the only difference is when they actually stopped working. It's not just about whether you are happy or you're feeling healthy or you have enough money accumulated. It's about whether you're burning through a tax window that we're talking about that has a very fixed expiration date, because once it's gone, you can't get it back. The tax math says retire as soon as you're financially ready, because every year you wait costs you a piece of that window. Researchers at the Brookings Institution studied life satisfaction across 46 countries and found a consistent pattern in happiness. So for a lot of people, life satisfaction actually peaks again in their late 60s and 70s. Canadian research specifically looked at the difference between people who retired on their own versus people who were pushed out, layoffs, health issues, restructurings. Planned voluntary retirement is linked to significantly higher life satisfaction and well-being compared to involuntary retirement. Now connect that back to the Manulife data I mentioned earlier. 56% of Canadian early retirees didn't choose it. Because if you're ready when the moment comes, whether you choose it or it chooses you, you're in a fundamentally different position than someone who wasn't prepared. There's also the loneliness piece, which doesn't get talked about enough. Statistics Canada data shows that roughly 1 in 5 Canadian seniors experience loneliness. The ones who thrive are the ones who are invested in their relationships.